Hello guys, welcome back to my channel. I'm glad to see you part through 2019 and we're all here in 2020. For those people that this is the first time to my channel, my name is Brother Ovin and I'm a full-time Forex trader from Tanzania, but right now I'm based in the UK and I've been doing this for 3 years now, going to my 4th year in 2020. And today's video we're going to speak about multi-timeframe analysis. I'm going to speak about the importance of multi-timeframe analysis, which is going to help us know how we get the entries. It's going to help us know how to deal with market structure. It's going to help us know how to manage the trades in terms of multi-timeframe analyzing. So stay tuned and I hope you enjoy the video. See you in a bit.
So guys, this is Jason Stone, the millionaire mentor, guys.
Channel, and as I said in the introduction video, that in this video we're going to do multi-timeframe tasking, meaning multi-timeframe analysis, analyzing the currency pair from higher time frame going all the way to a lower time frame. Now, why is multi-timeframe analysis an important issue for any Forex trader to know and understand very well? Now, the importance of multi-timeframe analysis is it helps you to truly read price and truly know what market movement is actually happening in the market in order for someone to take an entry. Multi-timeframe analysis, in short, is the golden heaven for taking a nice entry. Now, another thing that you have to know in order to have a very nice multi-timeframe analysis, you'd have to be very good in reading price as it is displayed by its movement. Another thing that you need to know is the market structure. You have to know to be very well in terms of identifying market structure, identifying the beginning of a new market structure and the breakout of the previous market structure in order for you to be well and do the multi-timeframe analysis very well. Now, starting using Australian US dollars, the Australian dollar versus the New Zealand dollar currency pair as an example, because we took this trade and I called this trade in the premium group. Now, this is the weekly time frame. We're going to start from the weekly time frame, trying to identify the overall market structure. As I said from the beginning, that market structure is something which is very essential for one to conduct a multi-timeframe analysis, which will be effective and efficient in terms of getting the entries. Now, just looking at this market structure, we come to understand that we are going on a very nice downtrend channel. That simply indicates that we're on a nice we're on a nice formation of swing lows, creating that nice downward movement of price. Now we can see that price actually faced some sort of barriers towards this yearly lows, that the pair didn't manage to come and close below these yearly lows. Right now we're just trying to tap these yearly lows before knowing the next movement of the market. Now, all our senses or everything that we are looking in this pair, we have to consider more in terms of the bearish pressure, because we're on that fine downward movement. You can see this downward movement, which has not yet been broken, because even this previous high has not broken the previous high. So we're still on that downward movement. Now, for a person who's starting, you can say that this already gives us that nice evidence that the market structure has already been broken, and now we're going on that lower, we're going on that higher or upward upward movement of market structure. As we can see that there was a formation of higher highs and higher lows. Okay, so right now someone would have said maybe this is just a small high low that is being formed, waiting for the market to go form a higher high. But I would disagree on that, because we can see that we had formed a very nice double top at this previous swing highs. Okay, we had formed a very nice double top at this previous swing highs, just indicating that there is more bearish momentum than the bullish than the bulls in the market. Okay, this just indicates to us that bears are stronger than the bulls in the market. That's why we saw this nice impulsive movement. And what does an impulsive movement indicate? That indicates the market structure, meaning when you see a nice impulsive movement to the downside, then we're definitely continuing to go lower. As you can see, the corrective phases are always the ones that have very lots of minor correction. Speaking of something like this one here, we can see this corrective phase. Okay, we can see this corrective phase having very minor corrective phases, and we can now see that impulsive move. So right here I can say confidently that the market has not been able to break this previous high, meaning it's not supporting the bulls. Okay, so bears are still strong in this market. Now, after knowing that the market structure is still bearish, that is when you can now go on lower time frame in order to know where the further movement is going to happen. Okay, for those people who are using trend lines, you can see there was a nice breakout of trend line. Remember the trick I showed you on the trend line video? So now we can see that we have had a very nice upward movement trend line now that has been broken, and we had that fine retest, and this, remember, is a weekly time frame. So we've had that fine retest showing that there is a bearish pressure going in around this region. As you can see, that nice rejection of price. Now the other thing that we're going to consider is just the weekly highs and weekly lows, previous weekly highs and weekly lows. We can now consider these highs, consider these lows. Okay, now the main issue here why we want to consider these regions, it's because we can see that we are having a very nice bearish pressure, but around these regions here we had that nice bullish entry. Okay, bulls entered around this price region here, so this could literally be known as our liquidity lows. Okay, these are our liquidity lows. Now liquidity lows are those regions whereby demand or buying orders enter into the market rapidly. Okay, they enter into the market rapidly, forming these nice weak rejections. So one of the best characteristics of liquidity lows or liquidity highs are these nice weekly rejections. We can see that whenever price taps these price regions or price range of 1.03500, we can see that we had a lot of orders enter into the market, giving us those nice pushes, okay, to the upside. Now this region is important for us because here is the only region whereby we saw that bears actually entered into the market very well. Okay, this is the region whereby bearish orders actually entered into this market. Okay, now putting that as a zone, we're going to measure this zone and see how many pips it has. 16 pips, so that is a good zone. I've measured the two regions that we saw bearish orders enter into this market. Okay, and these are the two regions here. We can see that one of the first orders or first wave of bearish orders entered into this market, giving us that nice push. Then price came, bulls entered into the market, went all the way to us touching these regions, orders again entered into this market. So what we're going to name this region, this is going to act as our supply zone. Okay, meaning that selling orders enter into this market just by looking at this weekly time frame or the weekly price action that is happening here. Going now on the daily time frame, we come to understand, we come to read price action again. Okay, oh, I literally can't get this. Okay, let's remove that. So going to the daily time frame, let us first try to read this market structure, then head to the price action. Okay, we can see that we have been having a very nice series of a downward movement. Now in this downward movement, we come to notice that we have had the same base of price, meaning that bulls were holding this price level very confidently, okay? Bulls were holding this price level confidently throughout these three drives, or the three pushes of that bears were trying to give or to bring. Now, this still indicates that bears are still strong in this trade, okay? Bears are still strong in this trade. And mind you, we took our entries around this price level. Right at the tip of the touch of the supply liquidity zone, we took our short entries. Our aim is to come and tap these liquidity lows, then we'd wait, get out of this trade, and see where else the market is going to guide us to head to, okay? Now we can see that we've been having a very nice series of bearish movements or bearish pressure happening into these regions. We see this was the first drive, we see the first drive, second drive, this acting as our third drive. We can now see that bulls had that consistent consolidative or sideways movement acting as a region of push to the upsides, okay? But bears had that nice ascending, that nice descending downward push, meaning that bears are actually stronger than these bulls because bulls didn't manage to come and break these previous highs, okay? We can see that this high didn't manage to come and tap this high, but us bears managed to come and tap these lows that had been happening towards this first push of the bulls. I hope that makes sense. So by this movement, you come to notice that bearish pressure is actually stronger than bullish pressure. Why? Because we are diminishing the bullish regions as we go on. So that is why this short region or this short trade was very, very valid for us. Let's try to imagine that, for instance, this price action wasn't there, okay? Because I know a lot of people will be interested in knowing, what if that price action wasn't there? How would you know that you're going to take these shorts, okay? Now let us remove this and we're going to study the daily time frame price action. Now we have to study these highs, okay? These highs have a tendency of repeating themselves. They have a tendency of repeating themselves. So you have to put that in mind and study the previous highs of the regions that you want to see or want to know what price is actually going to do on the next high, so you can know if you're going to take the trade or not, okay? Now we're going to study the recent high, which is this region here. Now in studying this region, you have to notice that the regions whereby bearish orders started entering into the market. You can see the first attempt of bearish orders entering into the market was this price region here, okay? After this price region, first attempt entered into the market, second attempt, okay, third attempt, then this was the final fourth attempt, okay? Now after studying that, price actually has we are seeing that we have created this high, so that means we are going on this nice slanting downward movement, okay? We are going on this nice slanting downward movement, meaning that the next high has to be lower than this high in order for us to get a nice confirmation of price rejections and in order for us to get nice shorts, okay? So you have seen I've studied these three, okay? These four push to the upsides, okay? First region of liquidity orders entered into the market around this region. Second region of liquidity orders entered both here, creating that nice double top. And the third region entered into this region here, okay? So just by looking at this, we can use this zone, we can use these two lines to create a nice zone whereby we're expecting to get any short entries at the top of the beginning of that zone, within that zone, or above that zone, okay? So this is the region whereby we want to take our nice next shorts of price, because we can see that we have that nice slanting movement to the downside, okay? We have this nice slanting movement to the downside, So we want our next short to be lower than this one. Okay, so that is what we are actually doing around this price level. All right, I hope that makes sense. Now going into the lower time frame, now we come to look at price and see what price is actually doing. So you can see what price actually done. We had that nice movement over here. Okay, we had that nice movement trying to tap these regions. Now going on to the lower time frame, that is the H4. Okay, going into the lower time frame, meaning the H1, we can see that we had that nice fine rejection. Let's move this trend line. We can see that we had that nice fine rejection. First, we had these three. Remember, price lives doing three drives, okay, as we have seen on the previous high. First drive, second drive, third drive. Okay, now our entry was called right here. Momentum trading is something that we do. So this was where our entry was called. Price just a few pips above. Aiming for a lot more on the below there. So we call this entry here. Why? Because right now we have seen that fine first rejection, second rejection, third rejection, and we know that whenever price forms this nice pin bar, would love to see price either come test the openings, okay, come test the openings of this candlestick, or 75% of that candlestick. Okay, most of the times price doesn't come all the way to the top, so always try to get the entry whenever price taps the openings. 75%, the top is actually very rare. Okay, so this is where we got our short entries. Nice short entries going all the way to the bottom. Now let us see what price did. And now this is the thing. Our take profit, first take profit was based on this region here, where when I just called the entry, we had that nice push to the downside. Okay, after this push to the downside, remember these are nice enough pips for someone to break even. Okay, now you don't have to break even quickly, because remember we're on this fine upward movement. So breaking even itself needs skill. Okay, remember on this fine upward movement, creating this nice series of highs and lows. Okay, we had this nice series of highs and lows. So our entry here was not based on this market structure, but remember that does not mean you have to ignore this market structure. Okay, so our entry was not based on this market structure, but rather based on the higher time frame market structure. Okay, so this is where we got our entry, but this market structure would tell us when to break even. Okay, this market structure will tell us when to break even. So you don't have to break even just by this start, because this would probably give us more probability of price creating maybe a double top, forming that break of market structure. Okay, meaning that we have already managed to disobey this upward movement of creating swing highs, and now we are starting to create swing lows. But we have seen that from just this downward push, there is enough pressure for us not to break even. Instead, just wait for price to create that breakout of market structure. Then after the breakout of market structure, that is when we can break even in peace. Okay, so let us see what price did. You can see now price had already tried to break that market structure. Okay, remember it has not yet tapped this region, so the market structure is not broken yet. Perfect. Now here is the region whereby I said now you can break even in peace. Why? Because remember, this is not a breakout. This right here is not a breakout, because if we put our last previous low, this was the last extent of the previous low. We can see that price had not yet broken out of that market structure. Okay, so this is not a breakout. Now we came to realize the breakout right here when price already tapped this region, came down, trying to form that nice falling out of people, and this is the nice break of market structure. Okay, right here, this price had already broken market structure. This is a continuation of the break of the market structure, forming that nice downward movement. Okay, you can see it is forming that nice downward movement, So this is the region whereby one could break even in peace and not feel or worry about being stopped out and the trade to go on its way. Okay, so yeah, this is a very nice example just to show how you can do an multi-time frame analysis, moving from the weekly going to the daily, as explained. On the daily, trying to study the market structure and price action, then coming down to the H4, trying to see any sort of rejections, going further to the H1 and reading that a specific price region, the specific minor liquidity pools that enter into the market. Okay, remember what I said, price loves giving us those tight drops, 3 touches, and we experienced it here. We had that first nice one liquidity wave, second liquidity wave, third liquidity wave, and that is when we got our entry after noticing that nice push and retracement or taste of the openings of the previous third liquidity wave. After that movement of the trade went directly to a fast take profit, but we did not break even. Why? Because you already know that the market structure had not yet been broken. So for those people who are trendline traders, then now you can see when you put your trend line, it can tell you that, okay, the market structure has been broken. This was like a retest. Now we're going to the downside. For the people who are now maybe the ones that use the fib tool, you can see that we're having that nice retracement of the liquidity levels. Okay, we have that nice retracement. And currently we can see that price is actually trying to form its next leg. So right there to that region, so this is an intraday trade. If you're an intraday trader, you want to take those nice trades, then this is an intraday trade. Just aim for there, waiting for that trade to at least get that nice push to the upside. We'll get that nice push to the upside because remember we didn't manage to close below this previous low. Okay, so we're definitely going to get that nice push to the upside, continue to go to the downside. But remember, our overall, this is a 1 hour time frame. Our overall trade was from this price level, aiming to get all this amount of pips, trying to come tap and take out these liquidity lows. So yeah, I hope this analysis will help you out to understand how to do the multi-time frame analysis, coming from the weekly, going to the daily, systematically going to the H4, then the H1. Enjoy your weekend, and see you on Monday. More trades and more videos to come.